everyone. Hello. Hello, good afternoon. Can you all hear me? Hello. Yes, hi. I'm going to try and turn myself so I can see all of you. Very good. Hello. Welcome to this breakout session on financial technology. We're going to look at some key developments in financial technology and their relevance for national security. For any of you I don't know, I'm Liz Rosenberg. I direct the Energy Economics and Security Program at the Center for New American Security. We're really glad that you've chosen to have lunch with us today and join us for this conversation. So as is abundantly clear, this is, of course, a breakout session for the CNAS annual conference. It also serves as an event convened under the umbrella of the CNAS Forum on Financial Technology, launched this past spring. And this forum, which usually meets in private and off-the-record sessions, but today in this public one, brings together, a select group of industry executives, financial policy experts, national security leaders to advance education, analysis, and informed policy and governance on financial technology. And it's organized around the notion that U.S. the FinTech industry can be an important basis of financial strength and security, and that careful stewardship in this area and governance, and careful governance as well, has an important bearing on U.S. economic strength and security. So a number of the members of this forum are here today. A couple of you are on this panel. A special welcome to you all. So turning to the substance of our session this afternoon, over the next hour or so, we'll be talking about a set of new financial technologies that are shaping the financial services industry, and specifically the way we store and transfer value and the shifting geography of that and geography of the innovation and the data associated with that. This is, to be fair, a fairly broad aperture. So we're trying to, and we have only an hour and a number of experts here, so we're going to try and stay rigorously focused on payments, currency and payments in particular, and developments in that space and national security implications of developments in this space. And I'm going to ask all of you, as you know, to comment particularly on implications for the United States and its security interests, also some of its security interests of closest allies in Europe and elsewhere. This is an important issue for commercial stakeholders right now, commercial stakeholders really at the leading edge of these kinds of innovation. And also for regulators and policymakers, not just those in the financial services or tech space, but those policymakers who concern themselves with national security broadly. And in an environment where technology has an increasing relevance to national security, one of the reasons that we wanted to bring this conversation into a public forum at an annual conference which concerns itself so intensively with national security and foreign policy issues is to try and elevate and educate and create opportunities for people who think of themselves as national security professionals to come together with others who think of themselves as financial technology or technology professionals to have this conversation together. I'm not going to go through the full biographies of our distinguished speakers. You have them in your program and on the app, but just to briefly introduce them before we move into a conversation together, we have, excuse me, I'll grab my water in a second. Immediately to my left, Aimen Mir, who is a partner at the law firm Freshfields, Brookhouse Derringer. He was previously the Deputy Assistant Secretary for the Treasury for Investment Security. Oh, thank you. I appreciate that. I didn't want to fall off my chair. I'm not that tall, so thank you. Okay. Previously as the Deputy Assistant Secretary of Treasury for Investment Security. That's the highest level career official managing the CFIUS process. That's a review process for national security for trillions of dollars worth of inbound investments into the United States. To your left, we have Usman Ahmed, who is head of global head of public policy at PayPal, which, well known to many of you, of course, it's a leading online money transfer service. The company has 200, and according to the website that when I checked last night, 277 million active account holders, deals with over 100 currencies, and is active in 200 markets. It's a pace setter on compliance and regulation among online payments or mobile wallet companies. To his left, Kristofer Doucette, a Vice President of Government Affairs at Chainalysis and previously of the U.S. Treasury Department. Chainalysis is a leading firm for compliance procedures and investigations of transactions in major cryptocurrencies such as Bitcoin and Ether. You'll tell us more. Natasha De Teran, to your left, Head of Corporate Affairs at Swift, which, as I was thinking about the history of financial innovation, is actually a very experienced innovator, a leading player in this field far before that term was cool, the FinTech was cool. And finally, we have Zach Goldman on the end, a senior associate. And let me also just say, for anyone who isn't familiar with Swift, sorry, 1 second here, it is no less than a giant in cross-border payment messaging, serving over 11,000 financial institutions, which exchange millions of payments and trillions of dollars worth of payments every day. So lots of experience there in cross-border payments. Zach Goldman on the end, a senior associate at the law firm WilmerHale in his current post, as well as previously at Treasury and DoD, and as the director of the New York University School of Law's Center on Law and Security. Zach has worked extensively on FinTech and illicit finance. So I'm going to start with you, Zach, to help us with a level set for this group. Can you give us, just to start, and apologies for the brevity with which I'll need you to respond to this, given the scope of the question. Can you talk a little bit about how FinTech is reshaping the financial services sector with an emphasis on payments and currency?
Yeah, absolutely. So first of all, thank you to Liz and to CNAS for hosting, and to all of you for coming to hang out with us. I'm going to keep this very brief because mostly I want to hear from everyone else. But I think when you kind of think about what financial regulation is all about, principally it's about three things. It's about ensuring the safety and soundness of the financial system, it's about protecting consumers, and it's about preventing financial crime. And while FinTech, I think, is a capaciously broad topic, fundamentally, if you think about the companies that one sees often in this space, they basically do one or a combination of those three things. FinTech companies enable access to finance, can provide banking services or banking-like services to the unbanked. They can help prevent financial crime. So Chris, I'm sure, will talk a lot about that, and help diffuse risk throughout the financial system in interesting and novel ways, whether that means interesting access to insurance products or things like that. The regulatory challenge, I think, that we face is that not all of those three things can be done simultaneously often, and that a lot of the products and services we think about in the FinTech space exist outside of regulated institutions, or exist in institutions that don't perceive themselves to be regulated, which is something I'm sure Aimen sees all the time, I know I see all the time, and exist in a global context. And so the fundamental challenge I think one sees is about determining the optimal way, or at least the way that minimizes kind of unintended harm and unintended collateral damage to the innovation ecosystem, to try and square the circle, to try and harmonize the three goals of financial regulation when applied to FinTech companies. And I think the area where one sees this most, or at least where this comes up in the public discussion the most, is in the cryptocurrency ecosystem, right? Where you have a payment system that can potentially allow lots more people to access financial services, to make financial services much more efficient and effective, and therefore inclusive, but also provide near real-time global irrevocable settlement, which is, I think, what makes people who worry about preventing financial crime a little bit nervous. And so I think, I'm sure everyone here will focus in some fashion on that set of questions. I think when we're thinking about FinTech and national security in the payment system, that's what we're worried about. We're worried about how to allow the beneficial effects of cryptocurrency, bring new voices into the financial service system, both at the institutional level and at the consumer level, but also prevent bad guys from using those characteristics that make cryptocurrency attractive for ill ends.
So just to follow up on that, can you just say a word about the nature of that conversation and its trace through into regulation in the US versus take a couple of other jurisdictions that are leading innovators, but is the conversation the same around those principles?
Sure. I mean, so I think the fundamental challenge, I think, that the innovation landscape faces in the US is that we have a fragmented regulatory system, right? And it's fragmented on a bunch of different levels. So you've got federal regulators, you also have state regulators that have jurisdiction over things like money transmission. And so many cryptocurrency companies fall under the jurisdiction of various state regulators. Even at the federal level, lots of different regulatory agencies are involved in this discussion, and they have different objectives. So the OCC or the SEC or the CFTC, lots of acronyms, right? Commodities Futures Trading Commission, Office of the Comptroller of the Currency. The OCC is a bank regulator. The CFTC regulates fundamentally futures and derivatives markets. The SEC, the Securities and Exchange Commission, fundamentally regulates securities markets. But all of these regulators, that are principally focused on safety and soundness and consumer protection, arguably, have applied their existing jurisdictional mandates to the cryptocurrency ecosystem. The law enforcement and national security agencies are also very focused on cryptocurrency. So FinCEN has done a lot in the cryptocurrency space. The Department of Justice has brought a number of cases involving cryptocurrency in a variety of different capacities. And the intelligence community is obviously very focused on the ways in which cryptocurrency can be used to promote illicit activity or to enable adversaries to do things financially that they couldn't do through the formal financial sector. So and then Congress is also involved. So I think the challenge that you're talking about is how to reconcile the competing approaches and jurisdictions of all of these different governmental bodies. Every country is set up differently to deal with these kinds of issues. Others, the UK has taken one approach. They've developed a regulatory sandbox. Countries like Singapore have aimed to centralize and streamline the regulatory architecture focused on cryptocurrency. We don't have a regulatory approach in the United States to cryptocurrency. We have many different regulatory approaches to cryptocurrency, and that can make it challenging for companies to navigate that landscape.
Okay, speaking of companies navigating that landscape, Usman, let me turn to you. So you think about this, obviously, not just in terms of the United States and that patchwork, but globally. You're active in lots of countries. Can you say a word about how you view payments innovation and competition between, if you will, and I know these are, just allow me the liberty to say, traditional financial institutions and more startups? And I suppose we can make an argument for PayPal being in either one of those buckets, but certainly at 20 years old now, the company, right, so that's pretty mature in the payment space in an environment of lots of dynamism and development right now. But can you make some characterizations between those two constituencies? Sure.
And I assume that bifurcation comes from kind of the history of the broader internet, and broader e-commerce, which really started 25, 30 years ago. And so there was this kind of narrative of a wave of upstarts that kind of took out traditional industries. And I'm not sure if that's quite what's happening in the financial services space. For a variety of reasons, but what I'd say is what we see from our perspective is that beyond disruption, which is certainly happening in financial services, you've got a lot of kind of value creation through integration, through partnership, through collaboration, and that's really a strategy that we've approached. And what I would say that does from an economic and from a national security perspective is when we can work with a bank or another player in the ecosystem to digitize a cash transaction, that's not necessarily disrupting that bank because that money might still end up at a bank or does end up at a bank. But it also enables, as you said, potentially a different type of transaction to come into the ecosystem, to become formalized, to be seen from a national security perspective. So I actually think through that partnership, there's a lot of opportunity, again, both from an economic perspective giving a lot more access, providing a lot more opportunity, but also from a security perspective to get better data, understand the risks better, and be able to combat those risks.
Can you make a comment on the U.S. And an environment for that versus other jurisdictions? Say, let's just take, for example, Singapore, in the UK, or in Europe.
From a business perspective, or regulatory perspective, or both?
Business perspective.
Oh, from a business perspective, I would say the U.S. is, right up at the forefront. I think there's a lot of banks in the U.S. that are very, very willing to engage in this area. I think Singapore is also very, very far in the front in terms of their business sector really seeing the opportunity, and they work a lot more hand in glove with their government just because of their history and the context of that nation. But I would say in the U.S. you see banks investing a tremendous amount in technology and really trying to do partnerships, do acquisitions, to really take advantage of this, because it's still, they see it as the way in which customers want to do business. They want to do business on their phones. And so banks are moving towards that, either with in-house innovation, with investment, partnership, all sorts of different methods.
So these models here, Natasha, let me turn to you. I want to ask you a version of the same kind of a question here. So reflecting on how innovation in the technology for payments, for moving value, even the nature of the value storage item in currency, how is that changing the way that you and at Swift is thinking about positioning in the market, and even some of these, what Usman was just saying about acquisitions or innovation from inside, partnerships?
Thank you, Elizabeth. I don't think I could speak here really about acquisitions today, but we're very much innovating from inside in partnership with the banks and with the fintechs and the whole wider ecosystem. And I would agree with a lot of what you said just now. I think we see the future as being an account-to-account future in which people fundamentally want to store their value in the place that represents their value, which is a bank until it's not a bank, but we certainly see it as being banks. And our big efforts are on certainly at the cross-border level, has been on ensuring the greater velocity of movement of value, whereas we move much more value across borders today, we want to do it faster. And that there are a lot of challenges in that, not least presented by the compliance factors. When you send money across borders, you might have exchange controls, you certainly have foreign exchange issues unless you're within the Eurozone. And you might have exchange controls on top of that. So it's not a frictionless experience, and it cannot be a frictionless experience. But using technology and affecting partnerships, we can make that a better experience for people, and that's where our focus is.
Can you make a comment about how you see financial system strength more broadly in Europe and in the United States, looking at a future that, as you say, is dominated by one to another, bank to bank, until it's not?
Until it's not. I don't know that I'm qualified to talk about financial strength of the banks, but I think what's unique, what's interesting about the two different markets is Europe is fundamentally 28 different markets, and currency is a domestic convention, payment is a domestic convention. And even if the currency within the Eurozone is a 16, 17 nation strong currency, the payment methods within those individual countries is different. So you'll see in Holland, people choose to pay using one app. In France, they choose to, I think, use the carte bleue. In Belgium, they do something else. In Italy, they do something else. In Italy and Spain, I think it's cash. In Germany, cash is still king. So you have these very small, or relatively small markets in which a provider can become dominant very quickly, but it can't move outside its borders. Now, on the upside, you can change a country very, very quickly. On the downside, you don't have the marketplace that the US has. So we've seen, I think, more innovation faster, or is it innovation per se, or more market movement faster in European countries. But I work at Swift. We're headquartered in Belgium. I'm in the UK. My boss is Dutch. My one of my direct reports is Italian and another is Irish. We all have different apps to pay each other, so we can't pay each other. So,
That may be a good thing.
yeah.
You better.
I'm sure you could all use PayPal.
We could talk about the charges.
Yeah, right. Okay, I'm going to move to talking a little about digital cryptocurrency. So we brought this up already. And Chris, can you start us off by making a comment about how the market penetration for digital currencies, and as you're looking at this is something that Chainalysis does quite extensively, how do these digital currencies change or influence the way that criminals move money, make payments? Sure. Are they still double down on cash? What are you seeing?
So, thank you. I'll tackle that in two different ways, sort of the evolution of sort of cybercrime and how cryptocurrency is used within that, and then how that intersects with national security concerns. So what we do at Chainalysis is we provide sort of that map between the crypto world and the real world, allowing regulators, law enforcement to understand how that it's not a brick wall when either a fentanyl dealer is arrested and there's a cryptocurrency address, or FinTech files a SAR, and being able to sort of understand what is associated with a cryptocurrency transaction. So first off, the market penetration is still very, very low, right? It's global, where you've got these jurisdictional sandboxes that Zach brought up, Malta, Singapore, even particular states here in the United States who have tried to embrace this technology and try to, they want to attract the jobs, they want to attract the financial innovation, and they want to allow it to grow. So you've got this sort of regulatory arbitrage happening where, different companies and exchanges and platforms that are using cryptocurrency are across multiple jurisdictions. So that creates a whole bunch of other challenges. But on the financial crime side, people are probably most familiar with Silk Road and being associated with the rise of Bitcoin and the darknet marketplaces, where people are buying fentanyl and drugs and other illicit goods. And that's a sort of traditional financial crime problem. How do you follow the money so people stop buying drugs? And I think the U.S. and international law enforcement have made great strides in being able to tackle this. But one thing or two things that I think are very interesting to bring up are ransomware and hacks. And this is sort of a cybercrime sort of tinge. If people aren't familiar, ransomware locks up your computer, and if you have to provide a certain amount of Bitcoin, or it locks your files forever. Probably the most famous is WannaCry. WannaCry, I think it did a lot of damage within the UK and the National Health System, but it also had global sort of reverberations. That was perpetrated by North Korea. So the fact that state actors are using these cyber tools that also have their cryptocurrency sort of intersection, I think, is something where they're low cost and able to do a lot of disruption. And the second one is hacks. These are things that usually fall by the wayside in regular press, but there was a good article in March that talked about how North Korea has been able to get over $600 or $700 million from hacking these exchanges worldwide. Just because, like I said, they're set up in all of these different jurisdictions, and while the technology behind Bitcoin is very solid, the platforms that sit on top of it can be very weak and may not have the best cyber hygiene. So you're creating these large honeypots for criminals, state actors, and other things to disrupt. So that's how I think sort of the evolution of financial crime involving cryptocurrency.
Let me come back to just, I'm coming to you in a moment, but state-backed actors using cryptocurrency to conduct financial crime, but also with a character that really attracts the attention of the national security community. So when North Korea, as a state sponsor, is behind a particular attack, it's not just concern about security and financial criminal activity. There's also a state competition or a national security threat. Can I just ask you, Zach, and anyone else who wants to chime in on this? Natasha, you might have some thoughts about hacking here too. but what is that? What should that inspire policymakers to think about when it comes to balancing some of the innovation with the protections that should go along with the movement of money or the any theft, policies around theft of that money and penalties for it?
Yeah, I mean, so the fundamental problem in the cryptocurrency ecosystem is that at some point you have to cash out, right? There's very little, you conduct a ransomware attack or you hack an exchange, right, and steal a bunch of Bitcoin. At some point, you're going to exhaust the ways in which you can spend stolen cryptocurrency. And you've got to take that cryptocurrency and convert it back into fiat currency and exit the kind of crypto ecosystem at some point. So I think the fundamental challenge there is, if the fundamental challenge at home is kind of fragmentation of the regulatory ecosystem, I think the fundamental challenge when one looks kind of globally is a very significant unevenness in the regulatory system. And there are jurisdictions that have not regulated or have regulated on paper but are not enforcing controls on the kind of exit nodes or entry and exit nodes between the fiat currency system and the cryptocurrency system. And so there, I think, organizations like the Financial Action Task Force, the Egmont Group, right? There are a lot of organizations that have developed in the last 20 or 30 years to harmonize standards around the world and to focus on helping countries implement those standards. And so I think fundamentally, the national security imperative is to get the regulatory landscape kind of working in lockstep, or at least not working kind of at cross purposes around the world.
Do you want to add anything?
I would. I mean, I agree with all of that. What we've seen in the attacks on banks on the SWIFT network that then result in fraud across border is, if a couple of years ago when this sort of became fashionable in 2016, it took about 3 days for the funds to be paid out. Today it's within a couple of hours. So it's moving fast, and this is within the fiat world as we love and know it. I think when you add crypto into the equation, things will speed up even further. So things need to be resolved, I think, probably first and foremost in the traditional banking sector, because what we also see is the destination, the beneficiary accounts that the fraudulent funds are directed to, is typically always in the same kind of subset of countries. And controls need to be cleaned up firstly in the banking sector and then exported as well across to the intersection.
I think this kind of amplifies Usman's point that, fundamentally it's about partnerships, right? Because when you're talking about cashing out strategically significant sums of money that have been acquired through criminal means, that's going to require banks. It's going to require banks that have some heft, right? Some ability to handle relatively large amounts of cash and liquidity. And those are banks with at least some institutional relationships, regulatory obligations, and partnerships. And so the ability to, I think, counteract that criminal activity in real time will depend on partnerships between the banks, the regulators, the law enforcement agencies, and the technology companies that may be able to spot that kind of activity in also near real time.
Okay, I promise we're coming to you, Aimen, but I want to ask you to chime in, Usman, on this issue. So banks or payments companies that operate across jurisdictions, Natasha, I think you just said the same subset of countries. So as you're thinking about the countries that you operate in or are seeking to operate in, some of which are particularly can be high risk for malicious or illegal activity, either because of a real dissimilarity in regulatory standards or policy standards or lack of enforcement or for other reasons. Can you just comment on doing business in this world?
Yeah, and again, I want to use this opportunity to draw the distinction between the challenge of financial technology and maybe technology in other spaces, which is to say, internet technology in particular does not care about borders. But the challenge in financial technology is that there are laws and there are requirements and there are different systems and there are different institutions. And so it's not really that easy to do a one-size-fits-all solution for 200 markets. So we're in 200 markets, but we have a number of different instantiations of our existing product in those different markets because of local requirements and local cultural differences and differences in product choice and all that kind of stuff. So it absolutely has to be done in partnership. And I also want to come to the notion of, being able to identify those kinds of hacks and those kinds of issues. Again, our value proposition and the thing we're trying to offer is that we can see a lot more because of the technology, and we can then offer that up to both our clients or our partners and to the government to be able to say this is a potentially problematic transaction that we can identify much faster in real time and flag, and that's a benefit, I think, to the overall system.
Thank you. I'm tempted to pick on North Korea and ask you to talk a little bit more about spotting North Korea in there, but now I am coming to you. I'm going to thank you for your patience. I wanted to ask you to make a comment on the laws, on the borders, and drawing back to your experience working at Treasury and now carrying that forward on investment review, inbound investment review, to make a comment about how the evolution in payments, banking and payments, what it means for institutions that will they face greater scrutiny in the United States as they're seeking to do business or may offer for acquisition some units of their activities?
So one thing to note is that compared to a lot of other regulation in the space, which is focused maybe not exclusively, but principally on abuse and misuse or attacks from the outside, investment review is principally about the insider threat. And I think what happens as the financial system and financial services becomes less and less of a closed system, and there are more and more players under the tent, there are more and more vulnerabilities to the entire system posed by that evolution. And it's often the circumstance that the vulnerability that's introduced is not necessarily correlated to the value that's added by that particular player. So you can be a relatively small value in the overall system, but you may have a window in that gives you much greater access than you might think from the value. So what that means is that in the FinTech space and the financial services space more generally, there are a number of, it brings together a number of the types of threats that you see usually spread in any other circumstance, maybe spread, you may find one or two, but not necessarily all the different types of risks, intelligence-related risks, law enforcement-related risks, and then critical infrastructure risks. And so the transactions that I'd seen when we were in government, whether it's in insurance or you saw investment banks, asset managers, companies are involved in authentication and so on. Some of them are regulated, some of them are not, and even when they're regulated, they're often not regulated from the perspective of how do you protect against a state-owned actor coming in from the inside as opposed to attacking from the outside. So the net result is that I think as these technologies evolve, there are going to be more and more potential implications from a security perspective that will sort of draw the scrutiny of regulators, whether here in the United States or elsewhere on the investment side. So
some people may have looked at the instance of the Ant Financial's acquisition of MoneyGram running into trouble. Is this what you're talking about? Do you think we're likely to see more of that kind of scrutiny? Is financial data, has it taken on a new status and the protection that we need to afford to it, or rather that U.S. officials want to afford to that as they're reviewing for security potential acquisitions in the United States, investment in the United States?
Yeah, not obviously speaking about any particular transaction, but data from a security point of view has just become that much more significant concern. And it's not because it wasn't a concern in the past, it's just that as it has become so much easier to aggregate massive amounts of data, and as the algorithms have developed to be able to manipulate that data, the overall risk, not just in the financial service sector, but more broadly, associated data have just expanded massively, and the number of companies in the process that can have access to those massive pools of data have increased. So, whether it's a payment services platform or that's well established, or it's a startup, you have significant concerns. I mean, in part because the government is trying to look around the corner. Which of these dozen companies that's in the space is going to be the next great thing? And if you don't start thinking about the risks now, by the time by the time it does become the next great thing, it may be too late to actually deal with the risk that's then baked into the company.
Let me throw a couple of questions to you as the group, and then I want to open it up for questions from all of you, so you can think about what things you want to ask, and I will shortly call on you. But before we do that, I want to ask a question to you all about identity, and so how you're thinking about identity differently in this world where not only do certain currencies feature more anonymity or pseudonymity, but also where there are where the bar to enter online payments or other financial applications may be lower with respect to the collection and verification of customer due diligence. And so if they're meant to plug into a cross-border payment system, even a domestic payment system, how should we or public policymakers be thinking about understanding identity in this space, and how policy ought to adapt in a world where it's certainly becoming much more complicated? I can call on you, you can volunteer.
I mean, there's an interesting relationship between finality and identity, right? So one of the interesting characteristics of Bitcoin is that transactions are final, they're irrevocable, right? And if a transaction is irrevocable, identity becomes less important because you can't reverse the transaction anyway, so at some level, who cares, right? I think
Coming from a lawyer, interesting. Okay,
Right.
yeah, go ahead.
Well, I mean, the point is that if you initiate a Bitcoin transaction, that Bitcoin transaction, because of the way the network operates, cannot be reversed, right? I think as crypto, so this is kind of very high level, but I think is just interesting, as cryptocurrency becomes more pervasive into the payment ecosystem, properties of finality will have to adapt, right? Because for all kinds of reasons, transactions may need to be reversed. As that process happens, identity will become more important. You'll need to know to whom you owe an obligation of repayment. And so I think as these technologies start to take on different features in different kind of nooks and crannies of the financial system, the mix, you can kind of think about finality and identity as two points on a spectrum, right? And kind of where you land depends on the need of the particular economic or financial niche you're filling. And so I think what you'll see is a greater diversity of currencies, and with them a different mix of properties as different types of technologies fill different economic and financial niches. So we've been conditioned to think for the last decade or so, as Bitcoin has dominated the cryptocurrency ecosystem, that there's some inherent anonymity or pseudonymity built into cryptocurrency, but I don't think that's right. And I think that in the next decade, we're going to start to see a much greater diversity of points on that spectrum between finality and identity and other kinds of properties.
And just to add to that point about finality and identity, and I think another piece of it is privacy, which comes out, not getting into sort of privacy laws or different jurisdictions of how they deal with it, but yeah, I think that is one of the big things happening right now or talking about when it comes to the cryptocurrency space of, there's this big locked door that everyone's concerned about, the Moneros and the Zcashes, these technologies that make it nearly impossible, that go from pseudo-anonymous to truly anonymous. I think that's sort of maybe been sort of overstated, just because even Zcash, which allows you to choose whether you're on this open blockchain or to make a private transaction, I think like a very low percentage of people have opted on that, like 10 to 15%. I think what's important is the difference between cryptocurrency, sort of these digital currencies, and then fiat, of who holds the data. Within Bitcoin or some of these cryptocurrency, it's spread, it's this open ledger that anybody is able to sort of follow transactions over time. Then you've got sort of this middle area where you've got digital currencies like web money or perfect money, which also serve as a bridge. These are, I think, Costa Rica and Moscow-based digital currencies. And then you've heard other things, Facebook and other companies that may introduce their own cryptocurrency. And then you've got, traditional ones, traditional sort of centralized places like PayPal or, others that are holding customer data. I think those are understanding those is, especially that middle section is kind of poorly understood. I think lumped into fiat and crypto.
So just, certainly at PayPal, we are a centralized player with a lot of identity experience, both within ourselves and with working with the broader financial ecosystem. But we also recognize that, a lot of the innovation in cryptocurrencies on the crypto side, a lot of it's on the blockchain side. And on the blockchain side, separating it from currency or from crypto, we did an investment in Cambridge. And so there's a lot of opportunity there for potentially a decentralized identity provider for people who are really challenged to find an identity from a centralized provider. There's a lot of people that don't have an address. There's a lot of people that don't have a formal identity document. And so there's another big opportunity for identity for a lot of people that don't have it as a result of technology more generally, but blockchain specifically also.
Anyone else want to make a comment on contemplating identity and the...
Well, maybe just to make, and we don't really deal with individuals, so our identity management is the banks. But I think when we look at the fintechs in Europe, and I can only speak from the European experience, they're really relying on the banks to do the ID management. So I can sign up to a digital account in no time at all with a fintech provider on the basis that I share a scan of my passport and my bank account details. So they really outsourced that back to the banking sector, who is not feeling so thrilled about keeping the responsibility and losing the business. Now, the idea that fintech can then solve for the unbanked, well, clearly not. They will need, so society probably needs to come up with this ID solution that's not going to be provided by the traditional banking sector. And that would be a good thing. So that was the only point.
Inclusion, yes,
Inclusion.
Absolutely. So let me just pause here and see if there are questions here. I want to involve you all in our conversation. I have one right here. Let's start off.
Thank you for your time.
I think it's on. Go ahead.
Thank you for your time.
And do just tell us who you are.
Sure. Hoonju Lee, and I support Office of Secretary of Defense on industrial-based policy and national strategist. It looks like the foreign investment to fintech, technology, IP, innovation companies, that's increasing rapidly. And I wonder what you think about the phenomenon. In the end of the day, even if we pay attention to national security, if we do not have the tool to protect America, probably that is another issue we have to resolve. And I would like to listen to your insights, especially from Usman and Chris. Thank you.
Yes, even starting off with a level set on, do we have good fidelity about where investment dollars are coming for fintech innovation in the United States? Is it domestic? Is it from foreign sources? Does that matter? Just to tag on. Can I ask you to start?
Yeah, I don't, it may be held somewhere in the government. I don't know that certainly the people that are spending most of their time thinking about investment are necessarily focused on it. I think it's mostly a bandwidth matter, but I think there is, for example, the legislation that was passed last summer clearly contemplates there will be increased focus on sensitive personal data and critical infrastructure. So I would imagine that there will be an effort to bring together parts of the government and even within Treasury that are tracking these things to make sure that there's greater fidelity over where that investment flow is coming from and whether or not it poses concerns. I will say that in the long term, when you think about investment review, I think the greatest threat to that is just a rapid adoption of technologies and the ability of something of a platform to develop sort of spontaneously and not as a result of a foreign acquisition of a U.S. company. So you may have an app that's developed in China, and in a few weeks it may have 50 million users. And so then the real question is less about investment review. It's more about whether the other regulatory mechanisms can keep up with the pace of innovation and deal with it from sort of more of a organic perspective.
And to the extent that there are U.S. users of that Chinese app, if they have knowledge of that and understand themselves to be therefore regulated under this jurisdiction. Right. Yeah. So much for decentralized finance or like jurisdiction neutral activity. It doesn't exist. I just have to get the memo out to folks. Go ahead.
Just want to add on to that point, I wanted to bring up how, not necessarily, at least in the cryptocurrency space, there's a lot of talk of sort of regulation where a lot of these companies will set up shop in a lot of these sandboxes that aren't under U.S. jurisdiction, which creates a lot of challenges on the other way, which is being able to subpoena an exchange that's in San Francisco can provide a lot of very useful information. But if they have no U.S. presence, it makes it a little more difficult. So I think one of the discussions that I get sucked into a lot is this idea, this regulatory uncertainty that Zach did a very good job talking about, has led a lot of these sort of FinTech crypto companies to set up in these jurisdictions that are trying to bring them in. A lot of, I think, related to national security, a lot of the U.S.'s sort of power in the financial space has become the power of the dollar and the ability to sanction entities and cut them off from probably one of the most important things that either companies or countries need to operate, the dollar. As this may evolve into a larger sort of financial alternative, how will that where U.S. national security sort of policymakers may lose that lever. And I don't know if and I'm not saying that's what's going to happen, but I don't think enough of that conversation is happening.
Can we also trace that through not just to the value of the dollar and the centrality of the U.S. banking system, but also the significance of the U.S. in so many global supply chains, such that if you use a commerce entity listing, you can also create that same severing, and that may have the same effect that you're talking about, but less for digital financial flows, and maybe for the kind of physical items that go into building the devices we use to flow that finance. Okay, so I had a question from over here, and then we'll move to some others. To Sam, thanks.
Sam Cutler, and we were just talking about regulatory uncertainty in the United States, and Zach started with that concept. If you, and by you I mean any of you, could pick one regulatory or legislative change that would help reconcile the desire for and the benefits for innovation with the national security concerns that we've been discussing.
Someone's looking at me. I don't know that there's a single kind of magic wand that one could wave and make the regulatory environment more hospitable. I don't know also that it's right to say that the U.S. regulatory environment is inhospitable. I mean, it's complicated for sure, but a lot of the global companies that are dominant in the FinTech space are American companies. And so I don't know that the U.S. is a hostile, I would say the U.S. is not a hostile environment for regulation. I mean, the way I think about this is less about absolute best and worst or good and bad, but rather about trade-offs, right? So the system that we have embodies a set of trade-offs and decisions that were made, in the post-war era when a lot of these regulatory bodies were set up and endowed with a particular set of statutory mandates. Countries with newer financial systems have the benefit, maybe, of starting from a clean slate and drawing on a blank whiteboard and designing a system that is best suited, for the time in which it's developed, and also for a particular set of value trade-offs that, Singapore may make differently than the U.S. When you think about the Chinese payment and FinTech ecosystem, it looks very different from the American system. I'm not prepared to say that one system is better than the other. But I do think it's objectively true that they each embody a different set of trade-offs that's reflected in the legal systems of each country. So when I tend to think about what would I want to see in terms of changes to a legal and regulatory system, I don't ever think that that a decision is free. Every decision comes with a set of trade-offs, and so I think the question really is, what balance of values and things like that do we want to see in the United States, over the next half a generation, let's say.
I've got one law, and I'm able to do one sort of initiative or law?
Yes,
Change.
only one bee in your bonnet.
Only one what?
One bee in your
wish,
bonnet.
okay,
Yeah,
right.
go ahead.
And I'm going to steal it from a previous CNAS event, something from, and I'll attribute it to Dave Murray, which is pay people at these agencies more, right? There is a lot of
If you want better hunters, you have to incentivize them
exactly.
more. Okay.
Right, and there's been several articles about people leaving particular agencies over time, and as financial technology is changing, adapting, having people to set up these smart regulatory bodies, you can't pay them like they're somebody working at the DMV, right? Or you will get, you don't want to, you need to have a sort of innovative bureaucracy to sort of keep pace with this. And, if somebody can go work in a Silicon Valley startup and make 2 or 3 times as much, it's very, it's tough to keep that talent that needs to create this smart regulation.
Surely this is a theme across a number of areas of government where there's a need to bring in subject matter specialists and technologists. Sure. Gary, over here. Thanks, JP.
Thank you. Gary Schiffman, CEO of Giant Oak, a FinTech, RegTech company. Great conversation, and this idea that we're still in the fiat currency world. That's the world we live in today, and there's this cryptocurrency world that may or may not be in our future. And we talked a little bit about the barriers to moving into a cryptocurrency denominated world, the regionality of it. You can't go global, you go country by country, regulations, things like that. Those are the reasons, those are the identifiable burdens right now. Could whoever wants to comment on what might change that? Is there a future in which we're not in a fiat denominated world, but we're in a currency, a cryptocurrency world? And what would trigger that?
I've actually always wanted to ask this question to Natasha. Can you imagine a SWIFT that's where the currency movement is primarily tokenized assets or digital currencies and not fiat currencies? But the rest of you should all answer Gary's question too.
I'm probably too old to see that one through. I don't know. I think intellectually I've got some questions around taxation and crypto. I choose to earn in sterling, not just because have the British skepticism for the euro, but I choose to earn in sterling because my biggest liability is in sterling, and that's not just my husband and my daughter, although he'd be number one. My biggest liability is the revenue. And so long as they want 45% of what I earn, I want to earn in 100% of that 45%. So I don't want to take any basis risk on the euro, Swiss franc, dollar, anything else. And I haven't seen clarity in how governments are going to deal with us moving to, let's call it a Facebook digital currency for the sake of it. What is 100 Facebook currency worth versus the pound? So I fundamentally think society, when people stop and think, why do I believe in the dollar? And the dollar's probably an exception because everyone believes in it. But why do I believe in this krona or the sterling or anything else? It's because my biggest liability can be paid off in that currency. And for us to suddenly make a switch to something else, if we're not in a terrible, terrible currency meltdown situation like Venezuela, I can't see societies moving to it. Now, us moving to wallets, that's something else. So 30% of my income every month I spend, according to my husband. If moving that into a wallet and it just goes straight out the other side, that's fine. And if there's a much more efficient way for me to do that than PayPal, but I'm very happy with PayPal, then maybe I'll move that way.
Just to add to that crisis, you brought up Venezuela, which is a great one, where the currency is worth so much less than, right, what is the alternative? One of my favorite sort of visuals is this, considering we're talking about national security, is the growth of the crypto economy in Iran, right? And you've got companies that are where you can rent out your apartment in Tehran in exchange for crypto, because the rial loses so much by the day, right? So there is a real world need to be able to store value in something that you can hold on to. So I think that's probably where you do see, there would be a change.
I can't help but pause for a moment to think that the currency that holds its value here is the cryptocurrency in this analogy, but okay, yeah. Anyone else want to offer? Okay, so we have a question that was over here. Yep.
Hi, I'm Dan Fisher. So I feel like regarding the relationship between business and government in the FinTech space, sort of heard what I kind of feel are competing messages. So on the one hand, there was some discussion around partnerships between firms and governments to identify problematic transactions. And on the other, we're told that we can't possibly have good regulation because the regulators aren't being paid enough to be smart. Or I don't have the bandwidth to focus on national security because I'm concerned with investing. And so I guess within the FinTech space, what specifically does a functional relationship between firms and government look like, sort of partnership towards national security? And what is a specific example of a highly dysfunctional relationship? I think that'd be helpful for me to sort of picture how some of these partnerships might play out.
Without outing anyone in the audience, I will say there's some great people in this audience who could answer that question, but I'm not going to out you. Okay, can I ask some of you to take a stab at that? Usman, why don't you start?
No, please, go ahead.
So I would separate out the notion of law enforcement cooperation and regulatory functionality, because those tend to be two different things. And so I don't have a specific example for you of something that doesn't work very well. But I do have, we talk about regulatory sandboxes as examples, but I think there's also, there's a lot of countries around the world that don't have notice and comment periods, don't have basic regulatory functionality that enables the private sector to really engage and provide effective commentary on where things are going. So, it's such a hard question to ask on a global level, but I also want to note that there are various degrees, and I think when you're talking about paying people enough, that holds true here, may not hold true in other places. In Singapore, for example, I think, the regulator and the law enforcement are paid quite well. So, I think I don't have a specific answer to a very broad question, unfortunately.
I think to add to it is, at least, it's not dysfunction, but I think it's something that if you're a bank and you have, if you're the U.S. government and you're providing some information to one particular bank, you're also providing it to not another bank or whatever, financial institution, FinTech company. So from a government point of view of, like competition and fairness, I think that's something that is you can't tell. You don't want to be sort of unfair to the private sector where you're giving preference of one over another. And I think that creates a lot of difficulty in the partnerships. I think the private sector would love to work closer with the U.S. government, but then how do you set up those consortiums? How do you get that sort of flow of information that doesn't sort of give one a competitive advantage over another?
Do you want to make a comment on this based on your experience?
Not anything more to add.
No, okay. Last question here in the front. We'll do a quick cleanup round, and then we'll break in order to give you time to move back to the main session.
Hi, Jonathan Lee with Mckinsey and Company. I had a question about a particular aspect of the regulatory environment, at least in some countries, which is a movement towards data localization requirements. And I wanted to get the panelists' views on what the relative drawbacks and benefits are, both from a regulatory and national security perspective and also from a business operations perspective.
It's a great place to end, yeah. Can we go down the line, and you'll say if you have a comment? I'm going to start with you, Aimen.
Yeah, I mean, in the security context, at least in which I looked at it, data localization presents obviously law enforcement considerations and intelligence considerations that, and I don't know that the discussion of data localization sort of more generally always is, I think there's different discussions, and it depends upon what it is that you're trying to protect. Is it a competitive position? Is it a market position? Is it security concerns, and so on? And I think different countries have taken different approaches, and certainly in the investment context, there are questions about when a foreign person is acquiring a U.S. company, what happens to the data, and it's not from a perspective of a market protection position, it's from a law enforcement and intelligence point of view.
And, I was going to actually answer the previous question with this notion of a particular regulatory challenge in this space. There are technical challenges associated with this. These, as I mentioned, the internet is a global network, so separating it out into individual nation states can cause problems from a core network functionality perspective. There's obviously business, problems in the sense of a lot of this business is set up based upon remote provision of servicing. And then there's the legal problem. I think this space is a really interesting space to discuss that, because I don't think it often gets discussed, which is the conflict of laws problem. Like, you have a law enforcement requirement in this country to provide data about a transaction, but you can't actually move the data to respond to that request because you have another requirement in another country to keep the data there. So I have no idea how that's going to actually turn out, and it's a huge problem that I don't think right now we have the kind of institutions in place to be able to deal with, and it's going to be very, unfortunately, probably pretty messy as that works out.
The only thing that it made me think of was the debate that's going on right now with the travel rule, which is kind of this sort of very esoteric rule within, I believe it's administered by FinCEN, which allows, sorry, I was looking for somebody to, you nodded, thank you, okay, good. Which obligates financial institutions that I think over $3,000 to hold the personal identifying information. It hasn't been enforced for a very, very long time, but this is the actually...
Supply that information when it travels across the border. Right?
Exactly. Right. And this hasn't been sort of enforced in a very, very long time. And this is like the center of the debate here in the U.S., but also at FATF, where these rules are sort of being applied. It's like an ongoing food fight that I think is sort of being hopefully hashed out now in Orlando, where FATF is meeting right today. So we shall see.
Yeah.
But we're primarily in a cross-border business, and now, naturally the data is stored at both places by the two banks. I think, so slightly out of our purview into the retail area, if fintechs, non-banks, whoever it is, take over payments, that I think data localization, you come back to the national security question. I'm a government. I'm in charge of peace, prosperity, and amongst that, I'm in charge of ensuring that there's a valid payment system that's going to keep going. I want to check your tax returns. I want to check for terrorism. I want to do all of this. I'm not going to be desperately comfortable not having that data where I am, I think. If it was in the banking sector, it would be with me. It would be in my country, it would be in my borders, I could get hold of it. Am I happy with that being somewhere else entirely? I don't know.
I don't think I have anything to add. It's a tough nut to crack.
Well, just one thing I would note in this space is there's a lot of central bank agreements, cross-border agreements right now to enable banks to be able to store customer information in other countries. So, I mean, certainly there's discomfort, but there's agreements like that enable this to happen. So,
yeah. But the apportionment of wealth throughout my society being held somewhere else. This is bits and bytes. Totally. I don't know.
Well, good.
I'm not a government, so it doesn't matter.
It's good to stop at a place where the conversation is still ongoing. We know that there's more to talk about, but we do have to break at this point in order to let you all move back to the main session after this, and within about 7 minutes. Thank you all for joining us. Please, won't you join me in thanking our panel with a brief round of applause.